What's good, everybody? What's good? And welcome back to the Modern Day Trader for another episode of the Q&A. I think today is a pretty interesting one. And I know, Sam, as a person, I know that you backtest quite a bit compared to me, whereas I like forward testing. But my question today with backtesting is how would a new trader take the backtesting and translate it into the live markets? How do they take that result that they get in and the whole process of backtesting and implement that into the live markets? That's my question, Sam. Bear in mind that I'm also speaking about the fast pace, fast pacedness of backtesting. You see the result right now. You go through everything mentally right now. How do they then adjust that and take it to the live markets?
Interesting question. Interesting question. And my thoughts are just going now. I'm trying to get into the habit of thinking, maybe the youngest. And,
Oh, now you can think
but
about it.
okay, so the question is essentially, as a new trader, how do you translate your backtesting into
Backtesting.
the live market? Because obviously backtesting, for anyone who doesn't know, obviously is using past price action to test a strategy, which you will effectively then use to trade the live markets. And that's, if you're not sure of how strategy is going to perform, then you backtest either over a whole bunch of pairs or over one pair. And then based on the response, you then obviously just gains confidence in the strategy, and then take that into the live conditions. So the question basically asks, I guess, how do you do that maybe effectively as a newer trader? So I think as a newer trader, the main focus is probably trying to find a strategy that works for you, or trying to find a strategy that you're compatible with. So it's a lot of I guess strategy testing the right strategy, and I guess just testing the right strategy on different pairs. So backtesting, I think, can get very advanced, and I won't go into that now. I think I'll address the question now, but like every topic, we can go very deep. But I think because it was directed to more new traders, I'll stick to that. So I think first and foremost, you have to have a strategy to backtest. That I think you'll waste a lot of time just jumping on the charts and saying, look, I want to backtest, and maybe I want to backtest to find a strategy, because then there's a lot of time you can spend trying to figure out how to backtest, or what to backtest rather, when you're not too sure what the strategy is. So I'd say as a new trader, the first thing is find a strategy that you will backtest. That's that'll be the first sort of point. Second is find pairs that you will backtest the strategy against, because if you only backtest on one and it's not successful, it may be that pair doesn't respond well to the strategy, but you may interpret it as the strategy itself doesn't work, which may be the case, but I feel like you don't have enough data on a certain strategy until you've backtested it across a few pairs. So first, find a strategy. Second, find, I'd say, at least 3 or 4 pairs that you're going to test the strategy on. They could be all currency pairs, could be a mix of currencies, commodities, and equity indices, whatever I think asset class you decide to trade. Just mix it up a bit and find at least four different asset classes to trade the strategy on. Obviously, each backtesting strategy, I think, should be ideally focused on one on just so that you can build up enough data. And bear in mind, you may also have multiple sessions on, and I think you need to determine what period you'll be back testing. And this is kind of, I guess, a bit of a tricky part of back testing, and that a strategy sort of varies in performance over time. It's either your returns will diminish over time as the market evolves, or over time, market conditions may adapt to, you know, work well with the strategy. So I think the third point is test the strategy over enough time, or back test the strategy over enough time so that the data you collect is more accurate. I'm just going to make a note of that. Test the strategy over enough time. So yeah, this goes back then to the point I was saying, where you'll have then multiple sessions, because within a backtesting session, depending on the strategy, if you are scalping, for example, within a day, you'll take maybe multiple setups, maybe 3 or 4. I don't know what it will be. I'm not really a scalper, but that that's only within a day, and that could be an hour-long backtesting session. And if you are backtesting the whole month of February, for example, then it's going to take you some time to build enough data on, February's trades, because you have so many, because you take quite a high frequency of, or high number of trades per day. It's going to be different for a longer term sort of swing trading approach, where you may get 3, 4 sort of setups in the month. So one single sitting or one backtesting session could be, a whole month. There, you're obviously then more looking to, build data over a quarter, or something a bit more relevant. So yeah, it's finding a strategy, determining which pairs you're going to test the strategy on, and then testing the strategy over enough time so that the data you collect is accurate, I guess. And in all of that, I would argue backtesting alone isn't enough, because, like Marcy was saying, when you're backtesting, you are, depending on the platform that you're using, could be, TradingView, for example, if you're on the Pro or the Pro Plus plan, or some other backtesting software, you controlling how fast time moves. When you identify a setup, you obviously pause it, and then, you mark up your setup and everything. But with a lot of the platforms, firstly, it doesn't incorporate news events. You may see what the news event of the day was, but unless you're trading very low time frames, it's gonna be hard for you to see that momentum or that volume at least coming into the market in real time. So you may see a lot of volume, but look, it's not a very accurate representation of your decision-making process, I guess, in live market conditions. So, for example, and it's happened to me a lot, I'll identify a trade, and maybe I'll, fast forward a bit too much, and I miss an entry. But when I'm back testing, I tell myself, look, I would have entered here, so let me mark this up. Maybe the trade's gone, 10 pips into profit. And, I'll just mark it up and say, look, I would have entered there. I'm still in the trade. Okay, let's carry on. And then it goes on and does like 8%. I'm like, okay, cool. It's fine. That was a winner. The trade played off 6%. I managed it. I moved to break even. But in a live market condition, you can't say I would have taken it at this point. If you miss the trade, you miss the trade. And I think that's where you almost have to be almost like brutally honest with yourself when you are back testing, in that you need to be honest about the trades you would have taken, the trades you would have missed, and how you would have managed trades in live market conditions. And only way you do that is to balance back testing and live trading at the same time. So whatever strategy you are back testing, I think make sure that you are, even if it's paper trading, just trading that strategy live at the same time, so that it's a balance of back testing, but then at the same time, you are maybe you back test an hour or two per week, and then the balance of the time you actually executing that strategy in live conditions to see whether you behave the same way, because then you start to pick up on small things on, if you identify a position in your back test, that, look, if it played out at a certain time, like midnight or something, I actually wouldn't have taken this position. So I can't count it as something that contributes to my back testing data because it might distort it a bit. So I think the fourth point is then simultaneously live trade, even if it's paper trading, while you are back testing. And I think as a newer trader, as a beginner trader, those are really the points that you should consider when you're back testing a strategy that will give you the best chance of making the most of your back testing sessions, because you can back test, but your back test can be very ineffective and not contribute much to, your development as a trader. So you want to make sure that if you are back testing, at least you are back testing realistically and doing it in such a way that the data you're collecting is going to give you the most accurate reflection of what your live trading will be. So just to run over the points again and a bit of a summary, it's firstly, find a strategy that you will back test. Don't just jump into back testing if you don't have a strategy, because I think it'll waste a lot of time, and you can begin to filter out setups or strategies that don't work a lot quicker when there is a framework that you're working with. The second, determine which pairs you're going to back test. I suggest at least 3 or 4. This can range across the asset classes that you trade. Third is test the strategy over enough time, basically. That's going to be dependent on your strategy again. If you're a scalper, a month's data, I think, is more than enough because of frequency of trades, the number of trades that you take. If you're a much longer term trader, a bit of a swing trader, then you might have to backtest a quarter. And on the same note, you may have to backtest certain periods over time to see how your strategy actually trades. So if you're a swing trader again, backtest Q1 2024 to date to see how your strategies perform this year, but also backtest Q3 and 4 2023 to see, okay, how did the strategy perform, last year? Is there any change in the data that I'm seeing on these pairs? And then fourth thing, to make it realistic, you want to be live trading at the same time while you are back testing paper trading, because you don't want to build a whole bunch of data from back testing, but you a bit out of touch with how you actually execute in a live market condition, what your trading rules are, when you take trades, when you don't. So I know when I get to my back testing session, I automatically mark out 10 p.m. in the evening and 7 a.m. in the morning, because I know anything in between that, I'm not very active in the market. So I can still identify positions in that session, in that time period, but I know, look, I don't execute in this time, but over time, if I see that, look, a lot of setups are playing out in that time, then that informs, it almost adds to the data I'm collecting to say, okay, I need to actually adjust my schedule so that I can capitalize on these positions that I'm essentially sleeping on. So, and that I only know because I'm trading live at the same time. I know what my schedule looks like when I'm at the charts, when I'm not at the charts. So to get the most real experience, you need to simultaneously live trade, which can be paper trading, and back test at the same time. I think, don't only back test alone, because you can really distort the data. So that's, I think, for a beginner trader, what I'd suggest in terms of how to approach back testing.
Oh, perfect, bro. Perfect. I think it's the reason why I asked that question is just because I know back in the day, I was backtesting my strategy. And when I came into the markets, I didn't understand exactly like why the trade was taking as long as it was when in backtesting. I'm fast forwarding 15-minute candles real quick. You know what I mean? That 15-minute candles are moving 3 seconds. And I didn't really take that into the live markets. And also, I feel like speaking to one of Sam's points is just being real with yourself in backtesting, because a lot of people tend to see that they have a 90 or 80% win rate in backtesting. And that's mainly due to the fact that, as Sam mentioned, you'd notice a trade after the fact and you'd be like, oh no, I would have taken that trade. In reality, you're not really training your brain to recognize patterns. What you're really doing is you're seeing the pattern after the fact. And so when it gets to live markets, and this happened to me, when it gets to live markets, you start to miss things because that's the habit that you built up and you can't reverse. So you can't go back. You already where you are now. The candles moved, and now you taking a late trade, or you're taking a trade that's basically out of your plan. And yeah, I think a big thing too, to me, is that backtesting don't work for everybody, and that's something that you need to realize. And I think one of the best points that I heard today about backtesting is simultaneous backtesting alongside forward testing. Because for me personally, I started to think I'm not a real trader because I wasn't practicing backtesting, because I just didn't get along with it. But I understood that if I'm in a forward test, then it's going to take a bit longer for me to gain the data, but I'm going to gain the exact same data. The only difference is that I'm going to be doing it live. That's the only thing. So yeah, guys, I think it's a really good points. To me, one of the biggest points are, Sam, to simultaneously trade live, whether it's paper trading or live trading with backtesting. So then you can cage, and you're not going to get that same thing that I got where you clicking 3 15-minute candles or 3 4 hour candles and your TP hit or your stop loss hit, and you don't really know that 4 candles of 12 hours, and now you're sitting in a trade because you swing trading, you're sitting in the trade for 4 hours and you're thinking, why is the thing not moving, or what's going on here, bro? So yeah, and then also just being 100% real with yourself. So guys, if you guys like this, I think it was a lot of good content in terms of backtesting and what you can do in order to gain data on your strategy, in order to basically move your data set a bit faster and gain knowledge on your trading strategy a bit faster. I hope you guys hit the like and hit subscribe, and don't forget to comment down below exactly what you guys want to know with regards to trading, and where we can maybe speak about it more and what we can speak about more. Guys, from us at Modern Day Trader, have a wonderful week and have a profitable week. Peace out.